Climate Summit over here at Slush today. I just want to ask everyone very quickly before we start, who are the climate tech founders over here in the room today? Lovely. And who are looking for funding? Amazing. And how many female climate tech founders are over here? Oh, nice. Lovely. Applause to you. And yes, and on that note, I think this is a beautiful panel set up, investors over here, a lot of insights coming in, and it's all about the playbook and the investors, and I think you will get a lot of things to learn. So I would start with a brief introduction. So we all know Daniel already by now, but yes, everyone, if you could give a brief intro of what you're doing, that would be great.
Great, yes, I'm Rebecka, I'm a general partner at Norrsken Evolve. We're part of the Norrsken platform. So Norrsken has gotten quite big now over the years, and we actually have 5 funds. We are the early stage fund. We do pre-seed all of Europe, focusing on resilience and sustainability. And we've been doing it now a couple of years, measuring everything and actually getting 100 in net promoter scores from all the founders we work with. So we're really obsessed about adding value. Good to be here.
Great, thank you, Rebecka, for joining us.
Thank you.
Tobren.
Hi, Tobren. I'm a former digital entrepreneur. So did co-found a company a few years back, and then successfully exited that, and then turned operator to VC. So partner at Extantia Capital is an early stage investing platform for deep tech, climate, and software. We're driving decarbonization and topics around the climate and resilience front, and trying to add value to our company. So we believe that VC stands for value creation. So that is our mindset that we try to employ. Thanks.
Thank you, Tobren, for joining us. Chris.
Hey, I'm Chris, partner at Lightrock. Lightrock is a global impact investing platform. We focus on backing companies that tackle humanity's most pressing challenges along the themes of people, planet, and productivity. We typically get involved at Series B all the way to pre-IPO, so we're probably at the later stage compared to like the panelists today, and can bring that perspective into the discussion. We manage 6 billion in total. Of that, 1 billion is dedicated, about 1 billion is dedicated to climate tech scale-ups. And that portfolio includes companies like Octopus Energy. Greg will be on stage later today, Sunfire, Group 14, Mainspring, to just name a few. Personally, I'm also an entrepreneur turned investor. So I founded a company, raised funding, scaled it, and then had a successful early exit, which comes in handy actually now working with founders as they scale up their businesses.
Thank you, Chris, for joining us. Applause for him. Well, some great people over here, and I am basically a contributor. I would love to introduce myself as well, and I'm the founder and editor-in-chief of Tech Funding News. We cover startups, scale-ups, investments, and innovations. So any funding rounds coming up, let us know. And yes, because we cover so much climate tech already at TFN, and we believe that climate tech operates within a turbulent macro environment right now. I mean, it's crazy times, and there is war, there is supply chain, there is volatility, there is shifting political priorities. So how are these factors really shaping your investor approach today? Daniel, if you could share something on this.
I would love to say in no way.
Okay.
As it's also, because the main aspect we always look at when we invest, of course, is the profitability, as I'm very sure that all the 3 of you will confirm this. So, of course, it was a lot of tailwind we had 3 or 4 years ago when climate was like in everyone's mouth, and now it's like other topics. to be honest, I personally don't care too much about it, but of course it has an impact, right? So especially those companies that have a green premium, that are more expensive, need more time, they are struggling now, of course. But we've foreseen such a shift. I also have a strong political background, and those geopolitics that are happening also now, were quite foreseeable. So it's always good if we investors invest into companies that can scale no matter what the regulation is, no matter what the political climate is. Still, we see decarbonization as a value driver. So at the core of World Fund's assessment always is the decarbonization potential. We call it climate performance potential, avoiding the word impact, because unfortunately there's also a huge misunderstanding that impact is doing good at the cost of profit, which is bullshit. So still, we can't change what LPs have in their head. So we proactively always talk, of course, about the returns our companies want to create, no matter if climate is a trend or not.
Got it. Tobren, what do you have to say on this?
Yeah, I agree to some extent. I mean, people are talking about the depression and the raising capital in the times that we're seeing, and there's some reality to it. But after all, we still filled the room, right? It's still the most oversubscribed side event of Slush, so there's interest in the topic. I believe not only in this room, but much further beyond. So I think that's the right foundation for what we need to do. And after all, what we're seeing is a little bit of a recalibration on business models, as Daniel has put. So I think in let's say, the wave that we've seen 2021, a lot of, or quite some of the 2021 FOMO investments that went through have lost some money to investors, and the market's now recalibrating on the basics, on commercially viable solutions that basically offer green discounts. So that is what's happening, and that is the business models that are being funded despite any crisis that we might be seeing around on a more macro level.
Got it. Chris, there was a lot of geopolitical tension right now. So is that affecting the investor approach as well?
Yeah, I mean, I think geopolitical tension plays into the macro turbulence, I would say. You know, I mean, it's one of the many aspects, capital, like correction, etc. There's more or less capital available, geopolitical uncertainty, etc. So, I mean, I think the way we think about it is it hasn't really changed like the why we invest in climate. I think many of the trends behind climate investing are just structural and secular, and they won't go away anytime soon. I mean, it certainly has changed the how, and I think like my fellow panelists already alluded to some of them. I think we're just generally like we're much more surgical when we look at investments and tightened really our criteria. And some of the topics were actually mentioned around not relying on green premium so much, capital efficiency. I think companies have to like really be competitive in their products in its own right. And I think we see actually a lot of that, and I think the funding will actually concentrate around these companies. And a second is really capital efficiency. I think what we increasingly look for is like founders and companies who like have a very good understanding of the milestones they have to hit and how to like gradually de-risk the product while actually doing more with less. And that's a lot of the discussion that we're having. And I do think it's like, in that context, I mean, yeah, this correction is not great, but I think there's also a positive aspect to it, because I think it sharpens the focus, it recalibrates actually how companies are built, and I think we will see more successful, better companies out of that. And lastly, one thing to add is here, I mean, in the past, I would argue like some of the rounds that we have seen with companies raising hundreds of millions and billions of capital, I mean, you wonder if that actually sets the right incentives, and that's actually the right way to build companies. And recalibrating back to that, now being able, as actually like a lot of like the capital has left the space. And I would say some of that capital is kind of tourist capital, which sometimes helps, but sometimes also just distorts the market, you know. And you then have to compete with that capital, which drives up valuations and is ultimately not good for like the returns in the sector and building like sustainable growth in the space. So in that way, there's actually a positive impact. Like I think there's still a wealth, a very broad amount of quality companies. It's just like less capital chasing them. And I think we're getting them at more sensible valuations, and I think they're built in a more sensible way.
That's some great thoughts over there. Tourist capital, you learn something new every day. I learned that word today. And Rebecka, Norrsken is like one of the hottest funds they've launched in Europe. And what's your investor strategy over there? Or do you have anything to share on this? I could see that you were like literally stopping yourself.
Yes, I mean, Norrsken has been around for 8 years, and our mission very much stays the same, right? But we're definitely viewing climate tech with a new lens. So this is the time of realism. I think utilitarianism is sort of not dead, but it's forgotten for now. People are living in like a time of war, of insecurity, thinking about their basic income. They're worrying about other things, and like populism is popular again. So I think in times like this, as a climate tech company, you need to position yourself as being, like you allude to, all of you, like cost competitive. You have to have a business strategy that makes sense from an ROI perspective. You need to talk about more sort of sovereignty, security, raw material, like you talked about in your entry speed. I think these are the climate tech companies that are going to be successful in a market like this. And I agree with you, Daniel, that you started saying that Europe needs to kind of rebuild its industry, and this whole concept that was based on like a fossil fuel world. Now we're in a post-fossil fuel world. What sort of climate tech is needed in this world? Well, it's a new generation of energy technology, energy security, of critical raw materials, of making our industry compete against China and the US. So have solutions that can reduce that cost of energy for our industry so they can actually compete on a global market. Many of those solutions are climate tech solutions.
Got it.
That's what we're looking for.
One thing I want to add over here is some numbers of the European climate tech investments. And I really want you to throw your insight on that, because from 11 billion in 2021, it went to 13 billion something, like 2 in 2022. But then basically, it came down 24% to 8.8 billion in the European climate tech investment in the recent years, that is 2024. So given this mix of strong, long momentum, Europe is still on a sustainable upward trajectory. But yes, because of AI coming in, I don't know, is AI really affecting climate tech in that way? So what sort of a plateau are we entering? Or what is the capital shift happening right now in the funding ecosystem in the climate tech? And what needs to be taken care of or changed?
So I think some of the correction is probably just sort of that a lot of the climate tech companies are rebranding themselves, right? Suddenly they're called deep tech, or they're called something else. So they're no longer called climate tech in your funding news, right? So I think a little bit of that is misleading. But yes, you're right. With AI, a lot of capital is flowing to AI. But with that said, AI is not a sector, right?
Yeah.
A lot of people say this, it's the AI sector. It's not a sector.
It's a technology.
It's like, it's enabling technology that actually has a massive potential for climate solutions. So I'm like long-term super excited. We're going to move from like physical iterations that are slow and costly, wasting loads of material, making hardware take sort of months to be developed, to suddenly sort of in silico iterations where you can do hundreds of thousands of simulations in a computer and then go to market much faster with your climate tech hardware. And I mean, this infrastructure build out, that we're seeing now of compute is the biggest infrastructure build-up we've ever seen. They're going to invest $1.5 trillion into infrastructure this year. With that said, though, way too much is going towards these AI app productivity solutions that are just incremental and wasteful, in my opinion. We don't need another sales agent something. We don't need another fancy dashboard. We need founders to use this AI to build, R&D discovery platforms for material. We need them to use it for the bioeconomy. It has massive potential. If you add AI intelligence to that, there's so many things we can do. So that's what I'm frustrated about. Like, I really want more founders to build in that.
Amazing.
Can I add something to this?
Yeah.
Would love to. I mean, completely on point. And as AI is not a sector, climate also is not a sector. It's not a vertical. So those numbers that you just mentioned, of course, I love them more when this number is going up, and love them less when they are going down. But it's misleading, right? Because I'm sure that among those 8.8 billion, IQM, the quantum computer producer from Finland, is not in it, but we invested because of the decarbonization potential. But on the other hand, maybe vertical farming, which is not a climate solution. It is adding emissions. Vertical farming is considered to be climate tech. So it's difficult to distinguish, and AI is at the heart of climate or of every technology nowadays. So you can't say AI or climate. It would be, it's just impossible.
I think you know what, there's a very nice scope over there, because when you see AI, there is a lot of data centers, there's a lot of ground space over there, there's a lot of energy over there. I was in another conference 2 days before, and they were telling me that there's the startup which has come up with an idea that they are using energy but producing more energy. I don't know how the science works over there, but yeah, there is a lot of scope, and that could actually go into climate tech or sustainability. Do you want to add something to it?
Yeah, I would say it's buckets that are overlapping, right? That might be contradictory at first, but in general, that is what's happening. And there's an enabling function of AI towards climate. I think that's undeniable. AI is doing a lot of other things that might add more value or less. But in general, I think it's an interesting field, and I think there's also one parallel between what we've been seeing in deep tech climate investing in the previous years and what's happening in AI investing, what other funds are doing. Because I think a lot of confusion is actually created in the market because there's the belief, particularly from more generalist focused funds, is that AI falls into, let's say, the software metrics bucket, which is not the case. AI is a super capex heavy undertaking, and we're looking at huge data centers, huge infrastructure investments in energy generation, storage, and transportation and grid technology. So in the end, I think there's this also from an investor's point of view, there's this misconception that you can apply like software, SaaS, B2B metrics to AI companies. You can project these ultra steep revenue path or revenue generation path and apply the same SaaS metrics to them. I doubt that this is going to work, because in the end, if you look at profitabilities of AI companies and how they develop, they are much closer or much worse actually in certain cases compared to deep tech companies. So in some way, the AI revolution is much closer to actually funding deep tech companies, regardless of whether it's in climate and robotics or other sectors that are neighboring. But in the end, it's way less close to software as compared to how many think.
Right, if I may add one thought here, as we talk about AI, I mean, and many of you have probably seen these charts, like revenue is like adversely correlated to actually the losses of these companies and the expenses that they have. So, I mean, where's this going? It's going into chips go into data centers. I mean, these are like energy guzzlers, I mean, like the trajectory that we're on with like these companies are showing, we just need to like cope with more and more energy. And more complexity around actually how you structure the energy like around these data centers, and that's where like there's a huge like opportunity as for us climate investors. We have placed a couple of bets around that, whether that's like a mainspring with a linear generator technology for dispatchable energy, so like they can actually cope then if there are any outages in the system and ramp up fast to keep these data centers operational, or liquid for composable data server technology. Is like there are a ton of like opportunities around that, and that's where you can maybe even like leverage some of the pocket that money that is flowing into the AI space, and also help fund these companies. So I do think there are a ton of opportunities around that. I mean, one more thought, as you mentioned, is like what do we need to see for this trajectory like to change? As you mentioned, like numbers actually falling in Europe in particular. I mean, it's all about like ultimately making Europe more competitive, and I think all the measures like kind of like obvious and lined out in the Draghi report, and I don't want to like repeat them now here. I think one of the things that is probably not so much talked about is how do we actually, I mean, one thing that we have in Europe, we have so much capital. It's like all the pension money, there's so much money in Europe, but that is all invested in the US at the moment, you know? And when you look at how much of that spend actually goes into private capital pots, like the percentage compared to the way that works in the US is much lower in Europe. So I think like creating incentives for actually that vast amount of capital to be more allocated in Europe into like these strategic like so vital like aspects of our European sovereignty going forward, like climate tech. I think that's a change that we have to work towards too, and that would really unlock more acceleration in this field.
Yeah, but do you know that there are 30,000 climate tech startups in Europe? That's another great number. And over here, how many climate tech startups have AI integrated in their company? And how many are thinking to? Okay. Maybe more hands should come up. But talking about that Europe, that's a very great point that European money is going into US. But at the same time, because I have some US audience, so I know that there are a lot of US VCs who are coming to Europe trying to launch funds over here. And I think I was just talking to someone and they said this is not the first time they're hearing about this at Slush today. But one more thing, Christopher, which I really want to ask you about is China, the elephant in the room that we need to talk about. And and 80% of the global battery and cell manufacturing continues to outspace Europe and US as compared to China. So why China is scaling faster and cheaper across everything from like EV supply to heat pumps? How is this industrial acceleration really reshaping the landscape for climate tech founders? I think it's for everyone.
Yeah, I mean, I love that question. And, I mean, it's because in tech, for the history, like, I mean, we have mostly looked to the West. And all like it's all about the US, what's happening there, and like what's the competitive dynamic. But now in climate investing in particular, we just have to very much look east and look at the vital role like that China is playing there. And I mean it's very impressive what they're doing, as you mentioned. You know, I think they're at an unprecedented speed. Scale and price really driving the commoditization of key climate tech technologies like solar wafers, batteries, heat pumps, etc. And as such playing like a vital role in the energy transition globally. And I mean, as a founder, you probably have to think twice whether you want to get into like the core lanes of where China is driving. However, despite these daunting aspects, I believe and we believe there's still huge opportunities and gaps where China won't be that strong. I think it's all about like really leveraging where China is strong and focusing on areas where they can't compete. And a couple of like categories that we are excited about in that context, like really IP-heavy kind of plays where, and then, I mean, China has been really good at the commoditization of hardware products and then driving incremental improvements on top of that, but not so much like at breakthrough technologies yet. I think that's an area that they're working on, but they haven't proven yet. And I think that's where European startups can really build an edge. The second is like focusing on this like system layer, which is around like software, services, etc. I mean, companies like Octopus Energy are a good example. I mean, it's probably hard to believe that like a Chinese entrepreneur will build like a utility in Europe at that scale. And while Octopus is actually leveraging like Chinese commodity technology in some of the growth verticals, like the partnership with BYD for home electrification. And I think one last aspect to that is actually leveraging the strength that China has in their experience of like scaling up technologies fast. We're actually seeing a lot of like early stage companies when they face, okay, I now have to build my next, my first of a kind plant. Yes, they are good like European engineers for that, but you may have heard about this Tesla Shanghai factory scale-up example, where Tesla has scaled a factory in Shanghai at a fraction of the time that they have ever done before. And now like European startups are inviting Chinese engineers to like really help them be faster, be more nimble, be more capital efficient. And I think it's a nice, I much rather think about like a coexistence and together push towards the right goal.
I think Tobren wants to add something on that.
Yeah. I've spent a week in China this year.
Oh, wow.
And it was an eye-opening experience,
Where
I
were
should say.
you?
Say again, please.
Where were you in China?
Different places. So we visited a lot of Chinese startups. We visited Chinese VCs, traditional, or the big players in batteries like CATL or BYD. So we got some.
Was it anywhere around Shenzhen?
It was around Shenzhen and around Shanghai, and then a little bit in the outskirts. But in general, these are the centers. Yeah. I think what you've shared rightly is that that there's one thing that maybe paradoxically China has understood better than the traditional capitalist countries or blocs like ourselves, and that is that execution is basically the key ingredient to win over the market, right? So, and I believe I totally share your opinion that there's one single way Europe can win this or can be also a winner in the space, and that is strong IP generation. But as history tells, Europe has been super weak in translating IP into execution. And what determines commercial success, and if you take one thing away from this panel, it is that execution matters and IP barely matters. So it is it's a dream combo to combine super strong IP with super strong execution. But what we're seeing from the Chinese winners is, in a lot of cases, a lower level of IP, but a super strong execution. And they're winning the world over with this concept. And you cannot make up, you cannot compete when you have not embraced very deeply this fact that seems to be baked in very deeply into capitalism, that execution is what matters. And as soon as I sometimes get pitches that basically pitch to me like our PhD level engineering team. So we talk to all these startups in China, and guess how many PhDs they have on the team? It's mainly the founder who did the PhD in Europe or the United States, came back around COVID to China to found their new company. And then there's maybe one or two other engineers on the team, and then there's a team of 100 who are non-PhDs, and they're executing the shit out of the factory, and nobody else can keep up with that. So it's and this is a completely different mindset. And I'm not saying that PhDs are the worst profile in any way, but I think it is a matter of prioritization where you set, let's say, where you're aware of potential, let's say, over-engineering efforts versus getting shit done and shipping products that might not even be perfect, right? So they are shipping good products that are good enough to win commercially, and then iterating on top. And in Europe, this oftentimes works the other way around. And then by the time China has took us left and right.
Doesn't it feel like Europe has been like the R&D department for China? So we do the R&D, but they get the full industry and the market like winnings.
And then there's Taiwan.
Yeah, right?
Like Taiwan is the holy grail of China, I believe. It was at some point.
Yeah.
But yeah, coming back to the West, fun fact, Europe produces twice as much startups in climate tech as US. But the exits and public listings are not at that fraction. So with climate tech, hardware exits often taking like in 12 plus years and mostly going into M&A markets, which is also immature. What does a realistic exit pathway looks like today for a European climate tech founder? Wow, yeah, what do you think, Daniel?
That's exactly the question that we need urgently have answered in Europe. We need improve our exit market, right? So then we, as the venture capitalists, will also be able to prove that we can return a lot of capital in Europe, right? I mean, the successful companies that we have or had mostly have gone public at the Nasdaq in the States. Too rarely in Europe. So the capital market union that we are speaking all the time, right? I mean, you said, Tobren, China is like executing the shit out of technologies, and we unfortunately are really talking a lot. I mean, you heard me talking about Europe. I love Europe, right? But we talk a lot and walk too slow. I mean, we walk into the right direction, but it's just like also regulations that is hindering our innovators to really succeed. And so this is also something that is written in the Draghi report. We are basically, it's tariffs of 70% that we are putting as Europeans on ourselves because we are fragmented. We can solve that comparably easy, but how the European Union is built, like everyone needs to agree, and it takes ages, and that's really something we need to change in these times. So still, I'm an optimist. Still, I see us moving forward and talking at least the right shit, right? I mean, it would be horrible if we would talk something that is not good on the political level, and I'm sure we'll get there, but yeah, we need this capital market union, and we need to have those exit markets in Europe as well.
Rebecka, do you want to add something on this?
No, I can just agree. And this is not just a problem for climate tech specifically. We need much more later stage funding. We need much more deeper capital markets. We need other types of funding as well, much more infrastructure funds and infrastructure lending. So we need a maturity in the later stage capital, which we haven't seen enough of yet. So.
And maybe just quickly, sorry, because you mentioned it before, Chris, we have so much capital in Europe. I think only in the Eurozone it's 32 trillion, which is invested either in the US, where then American investors invest into European companies and bring them over. Thanks for investing in all the R&D, and then as soon as it's commercialized, it goes over.
Very quickly.
Yes.
So much capital going to the US. Why? Is it the matter of mixed teams? Like 46% of your portfolio is now having mixed founding teams. So broader research backs this trend as well. I mean, looking at 25 to 30% most likely going into outperforming into profitability and innovation. So based on some numbers over here, what correlation are, if any, are emerging between diverse leadership and resilience in climate tech? Just throwing an angle over there.
I think diverse teams have been shown over and over again to make much better decisions in really complex environments. So when you face the challenges we're facing now with climate tech and tech in general in this market, having a diverse team, I am fundamentally convinced you will make better decisions, you will see more perspectives, and you will have to go after much broader market opportunities. So yeah, it's a core belief we have that we need to back more diverse teams.
Chris, Tobren, any wrapping thoughts on that?
Yeah, I think what we're seeing is what's really successful is founders that come from an immigration background, that have gone through a lot of struggles in their lives. They have the right grit to build a company and go through that difficult experience in building a company through also the difficult phases that it involves. And I think that is a pattern that we're seeing, and that is helping very much in making companies successful on their growth journey.
I think mixed teams are also good, if not founders. What do you think, Chris?
Yeah, I mean, I think, Rebecca, you're right. I think the data is out there, right? I mean, it's. I would say diversity has many aspects as well. You know, it's
exactly.
socioeconomic, but it's also diversity of thinking, approach, really life experiences, and I mean that's a key aspect. I would say how we assess opportunities. You know, and it's sometimes. I have to say, even looking back at my portfolio, it's some of the entrepreneurs who are most successful are they're a bit out on the spectrum, you know, because you have to, I think, to build these massive businesses. To some degree, you have to bring that, you know, yeah, I mean, we're deeply assessing diversity on all levels when we invest in companies. Yeah.
Yeah, I think more exposure brings more innovation, and Europe needs innovation in climate tech at this point of time, for sure. More AI integration is something that we learn. Are there any questions from over here? Anyone in the audience?
Mic on, please.
I don't know if there's a mic over there. Yeah, I see Alex.
Hello. Yeah.
Hi.
Thanks a lot for such a, you can say, very inspiring, and I learned quite a lot from the panel. I got the first question, so my question is really simple. Most of the deep tech, especially climate tech companies that we have in Europe, one of the challenge that, as a solar company coming out of Switzerland, landlocked country, we face is what had been done in the last 25 years is that the supporting industries that made solar doesn't exist anymore. It's not just about the technology that we develop at TTS Zurich or anywhere else. It's just the supporting ecosystem, the supply chain, when we call from machinery, we call funding is one. Okay, fine, you can give the funding. But if I have to buy a machine to make solar, for example, in Europe, the ecosystem is lost. There is no chemical manufacturers, there is no machine manufacturers. So unfortunately, we are reaching the top of the hill where either we slide down and there is no falling back, or we have to wake up now, as in Europe, and act fast, because we can keep talking for long. I'm a very early stage startup building a solar factory in Switzerland. It's a nightmare because the machinery makers are not existing. So my question is, do we have such gut and really the audacity to bring the whole ecosystem back to Europe? Or we followed some advice that we marry the both worlds and bring something together and love to coexist together? What were your thoughts on this from the panel?
Shall I?
Yeah,
you will hate my answer. You will hate it because before you shared with us that you are in the solar industry, I really wanted to say solar is gone. It's over. Europe won't be able to compete in that field ever. Let's focus our resources and on other things like Unfortunately, I've observed how we killed it in Germany. I was working for the German government while we've been leading in Germany in solar and wind, and I've seen lobby doing such a good job to destroy really our industrial future in Europe and making us even more dependent from Russia. So this is a story I can tell in another time, but what I've learned, and I think, Torben, you've been in China, and I think this is like also your conclusion, there's still stuff we can be better at, and we should focus here and increase the dependence of others, and solar is gone.
I tend to agree. I think I would answer slightly more macro to that one. I think globalization has the effect that manufacturing would move to the most efficient place. So we've seen that as China. In the end, the question for us is if we were to think about moving stuff back domestically to Europe or to the United States or whatsoever, there is no other way than with accepting a sovereignty premium to that. Because there's no way we can do it cheaper than China. So we know it's going to be more expensive, and that delta is the sovereignty premium that we either accept or we don't. So we don't have really let's say an answer on the level of the entire economy towards these sovereignty premiums. If you don't do anything, that is what's happening or what's been happening in the last few years and decades. Basically, this stuff moves over to the most efficient place. And if you find a way to make up for that sovereignty premium, then stuff starts to come back, right? And I'm not sure how this will develop. This is a crystal ball discussion, but I think this is the very basic economic context, and it does apply to any commoditized product. It's not a unique thing about solar or batteries. It's going to happen to everything that we commoditize in terms of also what comes out of the companies of yours. So this is let's say a macro question that we need to some extent find an answer to.
I think looking at 3 markets right now from a journalist perspective, US, UK, Europe ecosystem is quite open right now. It has changed a lot in the last 5 years. I myself have a business and I've grown in Europe and UK. So just be there. Just be there is something that I would say. And I would like to wrap this discussion as we are way above our time. Thank you so much, everyone. It was very inspiring and insightful. And yes, let's head on to the next one. Thank you.